Hello traders and welcome to another video review. Today is Thursday, November 23rd, 2023. Let's take a look what's going on the economic calendar today. As you can see, the key event of today is the German manufacturing PMI, which is scheduled for release at 9:30, together with the Germany services PMI. Then we got the manufacturing PMI, services PMI and composite PMI data from the UK. These data are scheduled for release at 10:30. It looks like quite busy London session. Then during the New York session, we got wholesale sales from the Canada scheduled for release at 2:30. And of course, we got some speeches from the German Buba. Mauderer will give a speech at 6 o'clock, and at the end of the day, 10:30, we got the Fed's balance sheet and data. So this is how it looks like actually on November 23rd, 2023. Because of the manufacturing PMI data from the euro, let's find out what's going on the euro dollar during our technical part. So this is the US dollar 4-hour chart. As you can see, very nice drop towards the lows of 1.0853. We can even manage to mark this low as the intraday technical support. These levels here has been violated as well. This is the 1.0888, 1.0896. So right now, if I zoom out, let me just zoom out for a little. There you go. If I zoom out, we can clearly see that this level here will act as the technical support as well. So let me just copy this line and mark this level here. 1.0825 is the technical support key, short-term technical support. We have the nice pullback from the highs as the bearish divergence has been done. Momentum dips towards the level of 44 points. Now we are back above this level again. So the momentum is kind of a strong, but it's definitely positive. 57 points right now, just ahead of the data release. What we need to do right now to regain more loss during this pullback is to test the 50 periods moving average 1.0939, break above technical resistance 1.0942, and then of course break above the 61% Fibonacci retracement, big black line. Let me make it thicker. This is where the blue arrow is. Now the arrow will be black. Okay, so we don't have any problems. Identify the 61% Fibonacci retracement. If the markets wants to follow higher, they need to break above this level. They need to move way higher than this level, and then of course the situation will be much more in favor of bulls on the euro dollar. So that's the situation on the euro dollar. Nice bounce from the lows. What is the British pound doing then? The same situation in the British pound. Please take a look. If we zoom in, we can clearly see the same kind of a price action on a big zoom. We dipped towards the lows at 1.2448, and now we bounced. So let me just place this line here, 1.24 to 48, intraday technical support. We hit level of 50. Now we're bouncing back up. Momentum is positive, quite strong, 58, 59 points. We are heading towards the 50 periods moving average 1.2530, and then there is technical resistance 1.2547, and we got this local swing high. Let me just change right now the outlook, the lines, sorry, for this level. Intraday technical resistance is 1.25 and 16. So what we need is another level here, so we can see the swing high is 1.2558. So we are heading back towards the last swing high. We need to break above the intraday technical resistance, but it looks very good for the bulls. So far it looks like the same price action might be done here. Very big long shadow, very big long shadow, and then another wave to the upside, and then another wave to the upside. Well, let's see what will happen here. The momentum is still positive. It's, as I said, is still quite strong. This technical support won't be used that much anymore. It's better to have it here at 1.2454, so just below this spike low. As you can see, you are breaking above the intraday technical resistance, so it's a good sign that bulls are in charge of this market, and we might see more upside to come soon. Okay, so this is the British pound. The other market we want to take a look at is gold. Why? Because if we switch to the daily time frame chart of gold, we can clearly see that we are nearing the level of $2,000 again. So what is going on here is that we got this level here, $2,008. And this is the technical resistance, quite important technical resistance. Of course, there is one more level which is very important as well, 2080, which is the swing high. Nevertheless, as you can see here, very nice reversal from the extremely oversold market conditions towards the extremely overbought market conditions, right? So 2008. Then we got very nice pullback lower, and the momentum broke the level of 50 here. Did it? Yes, 46 was the minimum, and then bounce back up again. So now the momentum is at the level of 60. It's strong, it's positive, and there is still plenty of room to the upside, before we will hit again the extremely overbought market conditions. So what is relevant here? Let me just add one more level here, because I've just noticed another technical resistance. This might be handy. 2049. Okay, so we have 3 different technical resistance levels, but overall the market looks quite strong. It looks like the market is ready to fly higher, to trade way higher than it is right now, because the bulls are very, very clearly in charge of this market, of gold, of course. Yeah. Let me just place short-term trend line support. As long as we trade above the trend line support, as long as we trade above 50 and 100 periods moving average, the outlook remains bullish. All we need to do is to break above all of these 3 technical resistance levels. Alright, so the outlook for the gold remains bullish, nothing changes here. And while we talk about the gold, let's take a look at the S&P 500. The situation here needs a little bit of the update. So what do we have here? Daily time frame chart. It's quite obvious that we got the breakout above the mid-term trend line, the blue one. We have the bullish cross, 50 periods crossing the 100 periods moving average, but and we broke above the technical resistance 4,537. There is a counter close above it. Today we are trying to move even higher towards the swing high from the middle of the July 2023, located at 4,612. But the market's conditions are already extremely overbought on a daily time frame chart, 71 points right now. So there is slight room to the upside in order to take out this high and make kind of a maybe double top or something like this. But with these technical conditions, it might not be that easy to do it, and the market might reverse to test the technical support again. It took 1, 2, 3, 4, 5, 6. It took almost 1 week after the breakout above the technical resistance to hit these levels, but the movement to the downside might be way quicker. Okay, because the market is trading above the moving averages, above the trend line support, above the technical support, the outlook remains bullish. However, please be careful, because the market is already extremely overbought. It might not end up very well soon. If we zoom out, you can see that in the background on the S&P 500 on the daily time frame chart, there is a clear, nice bounce moving up from the middle of the October 2022. But this is still not the high. The high is located way higher The swing high is 4,796, almost 4,800. No, 4,817. Sorry, this is the high. 4,017. Yes, 4,017. So basically, if we of course want to test this swing high, yearly high from 2022, well, they need to have way more momentum they have right now. But with this, look at this V-shaped reversal and the momentum. Very nice momentum, but are already in the extremely overbought conditions. So some kind of a pullback is needed. Maybe bounce from the technical support is needed in order for the boost to regain the strength, rebound, and then move higher again. That's everything from me for this analysis. Thank you very much for watching this analysis, and I hope I see you guys next time. For now, take care and bye bye.